Silver and gold investors have much to be excited about when it comes to the future. There's big reasons why we can have big optimism as we head into 2025. But there's also some warnings. Today, we have a special guest, Oren from the Silver Hermit, and he's going to talk to us about 2025 that we feel right now. Maybe we're in like a honeymoon period with Donald Trump, but 2025 could bring in some economic challenges to the United States, but that could also mean supportive factors coming into play for the silver and gold market. Oren, let's pull you up on the screen. Welcome to Ron's Basement.
Hello. Thanks for having me.
Well, you've been on the show. We just realized it's your 1 year anniversary. If we look back to 1 year ago, Oren, and I guess if we were properly prepared, we'd have this data, but I think it's safe to say that 1 year ago, the silver and gold price were significantly lower than where they are today.
Exactly.
Yep. And we were on that live stream telling people, hey, we think silver and gold are going to go higher. Do you think as a year from now, we'll see higher silver and gold prices?
I'm quite positive. Yes.
Yeah.
Yeah.
Well, hey, let's dig in. I want to talk about some big news that's coming out about China. There's reports coming out that we have the Chinese central bank buying gold again. I just want to touch on this, and then we're going to get in to Oren's analysis of what we can see in 2025 from an economic perspective. But Eric Young put out this tweet. The Chinese central bank just secretly bought 60 tons of gold. And we've got another piece of information here from Jan Neuenhaus saying that the Chinese central bank secretly bought 60 tons of gold. The PBOC is covertly buying very large amounts of gold, adding upward pressure to a tense gold market. An explosive cocktail of Western institutional investors and central banks in the East buying gold this year is making the gold price rise sharply. Interest rate cuts and geopolitical strain will sustain this bull market. This was originally reported in an article on Money Metals, and I saw this morning that Vince Lancy at Arcadia was talking about this as well. Apparently, the Chinese central bank is back in the game buying gold, which can only be good for the gold price. Any thoughts on when you hear news like that, Oren?
Well, first, it's not surprising. We were kind of expecting the PBOC to take advantage of every pullback, and we see them do that as a good stacker should do. They're being very rational about it. And also, I want to point out that we don't exactly know what is going inside China. They probably have multiple channels of acquiring gold and perhaps silver as well. And I don't think they're letting us know exactly what they're doing. They're being very secretive about it.
Interesting. Yeah, it'll be fun to see how this plays out as we go into 2025. I mean, look, I always like to say the world central banks are buying gold. These are the most in the know. These are the insiders. These are the most sophisticated people in the financial world. So the fact that they're buying gold, and now we know that Russia is possibly even going to start tipping their toe into the silver pool as well, can only be a good thing for the silver and gold price. Yep. Now, what about, I want to shift gears to Bitcoin now, because there's some people on the gold and silver.
That's a painful subject.
Yeah. We're going to go into the paint. They're right. We'll go into the paint. There's a wide variety of opinions regarding Bitcoin. Obviously, Bitcoin has been on this crazy price tear ever since Donald Trump was elected president. A lot of people in the gold and silver community don't like Bitcoin. Some people that are in the gold and silver community also own crypto. I do want to point out that I firmly believe that there's a lot of shared beliefs between the crypto community and the gold and silver community. But Ronnie Stofferly put out a tweet that I thought was something I'd never thought of when it comes to Bitcoin that's actually good for the gold and silver market. And I want to get your comments on this also, Oren. This is from In Gold We Trust, and I just want to read this about Bitcoin. It said, however, the fact that gold has gained new competition in the universe of non-inflationary assets need not be detrimental to gold. In line with the motto, competition is good for business, it is quite conceivable that a critical examination of the unsustainability of the current monetary system could lead more and more investors to realize that from a portfolio perspective, a combined investment in gold and Bitcoin is superior to the respective individual investments on a risk-adjusted basis. For years, our credo has been gold for stability, Bitcoin for convexity. And as I read that, what I'm hearing him say is that the fact that we have competition within the alternative asset, I hesitate to call gold or silver an alternative asset, but that we have that competition is actually good because it is waking up more people to the idea that you may want to invest in non-inflationary type assets.
Well, I don't buy that. I'm very sorry, but I always had a negative opinion of Bitcoin. I always thought that it is a competition to sound money, and that it is not truly sound money, and that it's a sort of a gateway drug towards CBDCs and other things that we wouldn't like to see. And I think that there is something very dark behind Bitcoin. Now, for those who invested in Bitcoin and made like bandits and made a lot of money, and well, congratulations to them. I just hope that they're doing the right thing and selling some of it and realizing some of their profit and converting them to real assets, to tangible assets, such as gold, such as silver, but also real estate, etc. And I think that's the best thing to do.
Yeah. Well, and speaking of real assets and people who are fans of real assets, I think this next story is the biggest story of the week for the precious metal sector. And it's getting some coverage, but I don't think enough coverage. And that has to do with the nominee that Donald Trump has put in place to become the next Treasury Secretary of the United States. His name is Scott Bessent. And he would be the fifth person in line of succession to the president. But that's not the important thing. The important thing to me is that this man has, number one, he's a billionaire. And number two, just a few weeks ago, he was on a podcast and he mentioned that gold was his biggest position and that he follows gold very closely. I want to reiterate that this is the next Treasury Secretary of the United States. Have you heard this story, Oren? And do you have any thoughts on how that is developing and what that might mean for the gold and silver market?
Well, first of all, yes, I've heard, and again, I'm not so enthusiastic because we see this tendency of people once they enter the federal government, they change their mind. They tend to change their mind as soon as they see how matters are going from within, and they realize, for instance, that for the United States to go on a gold standard, that would be extremely painful. It would be extremely deflationary, and it would really tie the hands of the federal government. They will no longer be able to print the US dollar at will, and they will have to balance the budget. And there are lots of consequences to going on a gold standard, which the current, even the Trump administration will not be enthusiastic of adopting. So much like Alan Greenspan, who used to be a libertarian, who used to be to follow Ayn Rand, and he became Fed chair, and he abandoned all his beliefs because he was within the system. And I'm afraid that this is what's going to happen again once you're in the system and the system takes over you. It's almost inevitable.
Yeah. I did find it interesting, though, that he at one point was aligned with George Soros. Here's a CNN article: huge relief, CEOs exhale after Trump taps Scott Bessent to lead the Treasury. But there was something, here it is right here. Bessent, he's 62, has worked with some of the most renowned investors in the world, including Jim Rogers, Jim Chanos, and Stanley Druckenmiller. And when I look at that list and I think about gold and silver, I know Jim Rogers is a big proponent of gold and silver for that matter. And I know that there's reports that Stanley Druckenmiller recently has spoken also very positive about gold and silver. And if I remember correctly, owns some pretty big positions in some of the big mining companies as well. So, you know, I do think that I understand what you're saying, right? Like these people, they start out one way and then they get into the government and they kind of get sucked into the system. But, you know, Oren, I want to play this quote. I played it in a video yesterday, but I want to play it for our live viewers today, where we have Scott Bessent. Okay, here he is. Make sure I've got that on the screen here, which I don't. Here's Scott Bessent in an interview from not 3 years ago, not 3 months ago, but literally 3 weeks ago. He was on this podcast called The Macro Maven. And I want to play a little 15-second clip here where he refers to gold. He's talking about China, and then he quickly shifts into speaking about gold. And to me, you know, this guy's a billionaire. He's got a lot of money invested, but he specifically says that gold is his biggest position. I'm going to play that for us right now.
Capitalism with Chinese characteristics or communism with capitalist characteristics. He's a Leninist. So he's not going to allow a clearing function in the market that would allow for a sustainable Chinese economy. Then I think we are in a long-term bull market in gold. I think we're seeing reserve accumulation by central banks. I follow it closely. It's my biggest position. And even I was surprised the other day when the Central Bank of Poland came out and said that they want to take their gold reserves to 20%. And you know,
okay, so he just said that he follows gold very closely. It's his biggest position. He said something else as well. He talked about the Central Bank of Poland. This is our next Treasury Secretary. You know, and he's a billionaire. So I don't know. You know, I know there's different opinions about how this could all play out. And then I thought it was interesting that when Donald Trump announced him, he said that he would. And I'm reading way too much into this, but Donald Trump said that Scott Bessent would usher in a new golden age for the United States, which is just a term of speech. But you never know, Oren, right? I mean, it beats having an incoming Treasury Secretary that doesn't like gold. I think the fact that this guy is invested in gold as of 3 weeks ago as his largest position is to me a very optimistic sign.
Yeah, it sounds good, but there's a huge difference between what you do on your personal portfolio and, you know, the policy that you adopt for the United States, because it's simply not the same thing. For the United States, for the federal government to adopt gold would mean that it would need to tie its own hands willingly. And this is something you know, just not long ago, Donald Trump said that he will not give up the dollar's position as the global reserve currency. He will even force countries to use the dollar by hook or by crook. And this is not the policy of someone who is, you know, in favor of sound money. When your currency is tied to gold, when you are on a gold standard, you don't need to force people to use it. They use it because it's good money. It preserves its purchasing power.
Yeah. What about this idea? What about meeting halfway? Because I keep hearing you say, well, going to a gold standard. And I don't think that we're going to go to the, you know, traditional gold standard in our country, but what about somewhere in the middle? Because are you familiar with Judy Shelton? And she was Trump had tried to get her onto the Fed Reserve during his last term as president. She's a huge gold proponent, and she's talking about this idea of gold-backed treasury bonds. Is there a hybrid in the middle where we could see some form of a backing of the U.S. dollar, maybe not this full-blown gold standard, which I think, you know, most people think is a rather far-fetched idea, but is there somewhere in the middle that could happen?
Well, first of all, I need to read the full, you know, the details of this proposal. Yeah. I tried to look it up today and I couldn't find the exact details. I need to give it some more thought to figure out what kind of impact it will have on the market as a whole. But look, on the face of it, like if you ask me what I would rather have, a gold bullion or a convertible bond, I would rather have the real thing rather than the bond, because perhaps the United States is going to, meet its obligations, including converting it to gold, and perhaps it's going to renege on its obligations. We don't know for sure. The only thing which is certain, if the gold which you have in your hand is real gold, it's genuine, then, and if you take the correct actions to protect it, then you have a level of security which is unparalleled.
Yeah. So next I want to get into with you your thoughts on what we could see coming in the next year. You have some strong. You've been reading newspapers, I understand, Oren, from 6 months in the future. So you're going to be able to predict for us what we can expect in 6 months, and maybe how that relates to gold and silver. But I want to get your opinion on one more thing, and that is what I'll call asset-backed digital currencies. I reported yesterday about Wisdom Tree, which is a moderate, large size financial institution here in the United States, and they have a new program where you can have digital gold basically, but it's backed 100% by gold in vaults. Again, you're not holding it in your hand, but it is backed 100%. It's in vaults. You can use a Visa debit card to spend gold and silver. What are your thoughts on that? On those types of arrangements?
Well, I'm open to such suggestions, and I'm open to such programs, because what they do, they make gold and silver more easily, transferable, and you can conduct commerce more easily. So perhaps it's a good thing. Like, I wouldn't take all my gold and silver and put it into such a token, but perhaps a small part of your allocation, you can use such a program, because it allows you to
pay your bills.
Yeah.
Exactly.
And it's a positive development in my eyes, but still, I'm telling people, keep most of your position in physical gold, in your grubby hands.
Right. Because when you come over later today, we can't take this in my neighborhood and go buy lunch. It's going to be very difficult. We'll have to go to a coin shop, convert it. So if these electronic solutions work, but I think there's a couple critical key things that need to be in place. Number one, the metal has to actually be there, right? It has to be audited. It has to be regulated to a certain degree. We want to make sure that metal is actually in the vaults. It also won't prohibit, and I love the way you say that, and I appreciate you saying it won't prohibit you or me from continuing to stack physical metal, right? I mean, we would want to still have our physical metal, but it would also allow people to use silver and gold to protect their cash that they would usually use for their everyday transactions, to protect it from the ravages of inflation. But I think the other thing that doesn't get enough attention on this whole subject matter is the fact that if these solutions were to gain popular adoption, it would create a massive new demand source for silver and gold as well. And again, it's not going to prohibit Oren or Ron or our viewer who's with us today from continuing to hold silver and gold in their possession.
Look, I've got to tell you, a couple of years ago, I did the research, because there are out there gold-backed or supposedly gold-backed cryptocurrencies.
Yeah.
And I started looking, into the fine print, and to my horror, I discovered that most of them, and there are several, are not really backed by physical gold, in the sense that the way they did it is that they leased gold from the LBMA without actually holding it. They didn't have their own vault. And when they said that it was audited, they got a piece of paper from the LBMA that it was audited, but no one has seen from, the issuer of the token, no one has seen the physical gold with his own eyes. So it seemed to me to be like a bit fraudulent. I want to be careful. I don't want to accuse anyone of a crime, but it didn't satisfy my standard for true gold backing. Now, I'm not familiar with the new program which you mentioned, and it could be, like the real deal, the real thing, if it is really backed by gold that they own, which is in their vault and they have full control of it. But I wouldn't like to have a token which is backed by gold, which is in the LBMA and perhaps exists and perhaps doesn't exist. It doesn't satisfy me.
Yeah. Nope, I know. Little Red, it seems like every time I've looked into these things, and I want to say thank you, Silver Surfer, for the super chat. Appreciate that. Every time I've looked into these tokenized, I know what you're saying. I'll just put it this way. I've yet to myself transfer any of my money into any of those solutions because but when there is a point where a guy like Oren and a guy like Ron, right? And, we're pretty skeptical. We're not just going to buy off, where we say, okay, I trust this works. And it really then, one of those solutions, whatever it may be, does gain popular adoption, that it could be a very good thing for the silver and gold market. Now, in the interim, Oren, we're going to talk about your view into the future next, but I do want to say thank you to channel sponsor Pembex. And when we're out here, I want to do an update on the gold and silver price. Let me make sure we've got us on the right screen. I do. So I'm going to press the Pembex magic button. Looks like yesterday we had gold at 26.26, and today, hey, we're at 26.44. So we're up a little bit today, Oren. Silver's taken a bit of a hit on the chin, but the day is young. Thank you to channel sponsor Pembex. What they offer the basement dweller community, the stacking community, is a great selection of products. You can come to their website here, pembex.com. They also have what I always find to be unbeatable prices, ultra competitive pricing. So it allows the stacking community to get more metal for their money. And also what I believe to be probably one of the most important factor is that they are a company that you can trust. Now, you need to find that out for yourself. I don't give financial advice. Do your own due diligence. But I can tell you that I have received overwhelming positive feedback from our community, everyone who's given Pembex a shot. And I would encourage you to consider them next time you're in the market for gold, silver, or platinum group metals. Now, Oren, 2025 is around the corner. You put out a piece not too long ago that maybe we're living in a little bit of a fantasy land right now, this post-Donald Trump election glow. Some people have called it a honeymoon phase. You want to share with us your thoughts on where we might be heading as we go into 2025?
Well, I want to begin by saying that I'm happy that Donald Trump got elected. I think he has the potential to restore sanity to the world. And in particular, I'm thinking about de-escalation of the wars, both in Ukraine and here in the Middle East. And I'm really, I'm keeping my fingers crossed that he will be able to restore peace. However, I'm kind of concerned that his supporters are currently in a bit of a state of euphoria. They're overjoyed by his victory, and I don't think they're thinking straight right now when it comes to the economy. And or
Bitcoin or Bitcoin. But I'm sorry, I had to throw that in. Yeah.
They think that he can just, make all the problems disappear. Inflation will go away and growth will come back just by entering the Oval Office. And I'm afraid that is simply not the case. I mean, like, with all due respect to Donald Trump, he doesn't have a magic wand, and he can't make all the trouble just disappear. We need to understand that America's financial trouble are the result of decades of bad policy and mistakes that have been made, and they cannot be undone overnight. Of course, you're showing us the debt, the national debt, which is mounting, and we also have the fact that inflation, although inflation is supposedly down, but it has already erupted. We've already had like this first wave of inflation, which means that if the Federal Reserve tries to cut rates again and start QE again, it can easily erupt again. That's, at least that's my view. The Federal Reserve is under the impression that they've already defeated the inflation, and I don't think so, because, you know, once you let the inflation genie out of the bottle, it is very difficult to put it back in, as the saying goes.
Well, you took the words out of my mouth, because I was going to ask you, do you mean the cat is out of the bag, right? Like it's the ship has already sailed, you know, that right? The money's been spent, and now it's time to pay the piper. The hens are coming home to roost.
Yes.
I'll zip it now.
Yeah, well, you know, there's this talk of having Elon Musk as the head of a department of government efficiency, which is a very nice idea. And he's talking about coming and cutting, I don't know, $2 trillion and balancing the budget. And you know, it sounds great. And it's like the correct thing, or the admirable thing to do. But the problem is that right now, government spending is such a huge part of the GDP that if you try to balance the budget, that's extremely deflationary. I mean, like that on its own can put the United States in a state of recession. Or if we enter a recession in the coming months, as I argue, it could exacerbate the inflation. So I'm not sure that it's really going to happen, and I'm afraid that's more hype than reality. I mean, like, we could balance the budget, and perhaps that's the right thing to do, but then there will be pain. It will cause a lot of pain. Like, somebody is not going to get their transfer payments. Somebody is not going to get their Social Security or Medicare, Medicaid. Somebody is going to suffer as a result of that. And right now, the Trump supporters are not willing to endure any kind of pain. On the contrary, they're expecting good times to come back. And I need to like burst their bubble and tell them, if you want to reform the American economy, it involves pain. It involves giving up some things.
Yeah. And on top of it all, the cherry on top is we've got a stock market that is at all-time highs, and I would call it a bubble. Some people, I've heard this, speculation, I guess I'll qualify it as, that they're kind of setting Trump up here, in that, you know, with the stock market in particular, I mean, it is just by any metric, any measurement, at bubble territory. That 2025 could be a year of, you know, everybody thought 2024 was the year of uncertainty, and including me. And I was wrong. Okay. A year ago right now I was saying, buckle up, Buttercup. 2024 is going to be crazy. We've got the Middle East, you know, all this stuff, the election, and there, you know, there's going to be fire and floods and everything else. In 2024, there were some events that occurred, but I don't think it measured up to what a lot of people had expected. Maybe 2025 is a year where we're going to hit some, you know, some rough patches.
Yes. And, you know, I'm sure that your listeners have heard plenty of pundits arguing, oh, we're going to have a recession. They've heard that at least 100 times. And so we're suffering from what I call recession fatigue, perhaps. and, you know, I'm very sorry to be in that position. I really hate to rain on everybody's parade, but right now, I'm afraid there are signs that, again, very dire signs that we are getting close to a recession. And I want to say more or less in the next 6 months.
Yeah. Well, and then I want to get your charts, but let's be real here, Oren. We are living in a fantasy world right now from a monetary perspective, right? We had the U.S. debt clock pulled up earlier. I mean, at the end of the day, I love the saying, and I think it's one that everybody needs to examine and internalize, that mathematics shows no forgiveness on the altar of truth, right? That 2 + 2 is always equal to 4. And when you look at the amount of debt we have, when you look at how the deficit is continuing to grow, when you look at the fact that we are now spending $1 trillion a year, okay, over the weekend, we broke on the U.S. debt clock above $1 trillion a year in interest payments alone. And then, like you said, right, like look, I'm all in favor of, I live my life, I imagine you do too, with a balanced budget. I bet our viewer lives with it. We're forced to live with a balanced budget. I'm all in favor of the United States living with a balanced budget. But Donald Trump is not a magician, right? Donald Trump, like you said, does not have this magical wand. If we're going to balance the budget, well, then that's going to be a big decrease in government spending. And we all know that we live in this environment now where government spending supports a big segment of the economy. There's going to be pain. I mean, is that what we're potentially headed for?
Yeah, and I think that Donald Trump himself, he doesn't believe in pain. He believes in growing the pie. He believes, he said on several occasions that he likes debt. Of course, as a real estate developer, that was very good to him because he was.
I'm sorry, Oren, I got to throw this in, and then I promise I won't interrupt you again for the rest of the show. But Donald Trump loves real estate, right? Real estate is a real asset, right? What else is a real asset? How about this, right? Is this a real asset? Yes. And you're absolutely right. Donald Trump is the king of debt, and he loves to spend money. If you look at his personal life, if you look at his business background, if you look at the last time he was president, to suddenly think, and maybe we're wrong, but to suddenly think that he's going to stop spending money, racking up debt, right? Like you he likes to grow the pie. Right. And that's not making a political statement, but we're not paid to be political analysts. We're paid to be analysts of gold and silver. At least that's my niche. And I think your focus as well. And when we look at that, we got to look objectively at what we can see coming. And now the floor is yours. I will not interrupt you again.
I want to say, by the way, there was a time in which growing the pie was a good policy. It was a good idea because if you could, borrow money and invest it and start new products and create jobs and increase the GDP so you could make the debt smaller in comparison to the GDP. You would have a lower debt to GDP ratio, and that was like the philosophy, to grow out of debt. Mm-hmm. And the United States was able to do that several times. I just don't think it's possible right now because now we have inflation. Yeah. And there's a danger that if you print a bunch of money or if the federal government starts spending again, then it's only going to exacerbate the inflation, and it's going to get out of control, and eventually the dollar is going to collapse. And one more thing I want to say, when you're a company, a private company or a listed company, and you take on debt and you default on your debt, what's the worst thing that will happen? So the company will go bust and the bank will erase the debt, but you personally, you won't lose your assets as the owner of the company. But on the other hand, the federal government cannot default on its debt. Well, it can, but there's going to be consequences to that. Yeah. It's not going to remain. The dollar is not going to remain the global reserve currency while the federal government defaults on its debt. And there's this saying that mainstream economists, they say that the U.S. cannot default on its debt because the Federal Reserve can always bail it out and print dollars and and buy all the treasuries which no one else wants to buy. But the problem with that is that, as we said, if the Fed goes back to printing, that exacerbates the inflation again. It weakens the dollar, perhaps going to collapse the dollar. So any way you try to move this, you end up with more inflation.
Yeah.
It's and this is why you're the one who keeps saying the Fed is in a box.
Yeah.
That's exactly the thing.
You agree with me? The Fed is in a box. And you know what's in the box, Oren? Right?
Yeah, the toilet paper.
Right. And that's their.
I would take someone else and put him in the box. The federal government is also in the box together with Jerome Powell. It's a big box, and they're all in it.
Yeah, and then let me ask you this question, because I've said, like, inflation will rule the day. Like, we were in this little fantasy world from a gold and silver perspective over the last 2 or 3 years, where I think the Fed still had some potency left to it, right? And the Fed was fighting inflation and raising interest rates, and that was bad. We had high inflation, but a tough market for gold and silver. I think the cat's out of the bag. The ship has sailed. Now we're in an environment where if we get higher inflation, gold and silver are too smart. They realize, like, the Fed's done. The Fed's in a box. They don't have the potency that they once had. And that now we're in kind of a new paradigm, and not a new paradigm. We're in really what is the truth behind gold and silver, which is gold and silver perform well in an inflationary environment. Does that make sense?
Just think about the progression of the narrative. At first they said there's no inflation. Then they said, okay, inflation is transitory. Then they said, okay, there's inflation, but we're going to fight it.
Yeah.
But now they're saying, okay, there's inflation and we're not going to fight it. They're not exactly saying that, but that's exactly what's happening, because inflation is still, although it has come down, it's still above their target of 2%. Yeah. And they're lowering rates again. Okay, they're cutting rates again.
Because that's all they can do. It's the only way the system survives, right? Is to have negative real interest rates, to have inflation, to inflate away the debt. Right. And the one thing, Oren, I think you and I can agree on this, is amongst other things, and I think our viewer would agree with us as well, is the one thing we know for sure from the last 20 years is don't listen to what the Fed says, because often what they say is either wrong, or I might even say speculate could be a stretch of the truth, right? I mean, these guys don't really have a track record of being accurate or honest with the American public.
Yeah. Look at the price of gold, and it will tell you all you need to know about the Fed.
We're going to look at some charts.
I think all your listeners understand this hint.
I think we just solved the world's problems, Oren. Do you want to look at some charts, Oren? Should we see?
Yes,
okay.
yes.
All right.
Yes.
I'm going to pull up some.
It's important for me. Look, when I come and say such a thing as, hey, I think we're headed towards a recession, and not just, sometimes in the distant future, but perhaps quite in the near future. I'm not saying that just, I'm saying that based on data. So I need to show, although, it looks kind of scary, but I want to, your listeners, they should know it's not as scary or as complicated as it seems. What we're seeing right now on the screen is simply the best indicator that we have for a coming recession. That's the only thing that they need to understand. Now, I will, explain it just very briefly, that this is called the yield curve. And the yield curve simply is the difference between the yields of two kinds of treasury bonds. The difference between the long-dated bond, the 10-year, and short-term bonds, the 2-year. And normally, this difference should be positive, because if you're purchasing a 10-year treasury, you expect to earn a higher yield, because you have more risk, more
duration risk.
Which is associated with it. So you expect to earn more yield on it. But as you can see, every now and then, this difference, it inverts, it becomes negative. Mm-hmm. And historically, such inversions, it's called a yield curve inversion, is associated with a recession, and almost without fail. Now, the recession doesn't arrive immediately after the yield curve inversion. There's usually a time lag of up to 2 years, and it's you can see on the chart that I've highlighted in pink all the inversions, and as you can see, every pink blip leads to this gray line. With the gray lines are the recessions, of course, and you can see that after one comes the other. And usually, also notice that usually the recession comes only after the inversion is over. the yield curve returns to the positive region. Now, look what happened 2 years ago. A couple of years ago, the yield curve again inverted. It was a very deep and very long inversion, by the way. And just this September, it uninverted.
Interesting.
Okay, so a couple of years ago.
Can I interrupt you for a second?
Yeah.
Okay, I want to make sure I've got this right. So this chart shows yield curve inversion. It's the relationship between the interest rate on a 10-year bond and a 2-year bond, which is what it says down here at the bottom. Yeah. Typically, if you're going to tie your money up for 10 years, you're going to get paid a higher interest rate, whether you're doing a bond or a CD or whatever. But when the yield, and then as compared to a 2-year, you're going to get a lower interest rate on a 2-year. When the interest rate, when the yield curve inverts, that means that the interest rate that you get paid on a 10-year bond is less than what you're being paid on a 2-year bond, which doesn't make sense. In the periods of time since 1980 that happened, you highlighted in pink here on this chart. We can go from 1980. We can see that on the left here that the yield curve has inverted, -1%, -2%. And every time that happened, like you said, subsequent, just after it finished inverting, we have these gray sections, which are recessions. And what you're saying now is, we go to the far right side of this graph, and I know that because, right, like I could go in a money market account, get 5% interest, for the last couple of years, or go to my bank and get a 1-year CD at 5%. But if you wanted to tie your money up for 10 years, maybe you were only getting 4% or so. You were getting paid more money for a shorter duration, whether it be CD or Treasury bond or whatever, than you were getting on a long term. And what you're saying is we're just now coming out of this inversion. I wanted to make sure I had that right and that our viewer was understanding this as well, because I think it can be a little, people hear yield curve inversion and they're like, oh, it's like magic or something, but it's really quite simple.
Yeah, and people don't really need to understand why it happens. I'm not going to get into it, but the thing is, it's just very reliable, and this is where I can't argue with this piece of data because it is so reliable. So in 2 years ago, when I saw this inversion beginning, I told my listeners, my readers, that hey, we're going to have another recession. But 2 years have gone by, and that inversion, kept going, and no recession in anywhere to be seen. So it looked as though for a while it looks as though it was meaningless or it missed this time. But I think that now that we are uninverting and
that's when the recessions come, right? Oren, right? If we look at this graph, the recessions come at some point shortly. I mean, as I'm looking at all these, after the pink sections, that's when the recessions come. But I think you're right.
I think we should take this very seriously.
Yeah, but I do think if we look back to the last recession, which was 2008, we've gone a long time. You said it earlier. I think we have recession fatigue here in the United States. Like everybody's saying, oh, but it just seems to never happen. But maybe, and I don't want to go too far down this path with you, but maybe it's because we're in the final phases of this period of time where the Fed is just doing everything and anything they can, right? They did when we had the banking crisis a year and a half ago, they did the BTFP program. It's like the car that has 400,000 miles on it, and they're throwing bubble gum and duct tape at this thing just to keep the gas pedal down and keep it running. Do you think that the longer it goes, the harder we fall, if that makes sense? Possibly.
The length? Are you talking about the length of the inversion?
Yeah. Well, I mean the potential for a recession or even a depression potentially. I mean, do you think that the longer we stretch this out, we've avoided this recession for so long that if we do get to a point where we do have some type of economic turmoil, that it could be more severe because we've prolonged it?
I'd say it's more linked with the severity of the mistakes that have been made during this past decade. The fact that interest rates were so low, that people took on so much debt, and some of it was taken in order for projects which are completely unprofitable. So mistakes were made, and as you said earlier, we need to pay the pipers sometime, and I think we're close to that point. So I went and started looking for other evidence, because I don't want to rely only on one indicator. I want other corroborating indicators telling me. So I looked at the unemployment rate, and during times of growth, as you can see, unemployment tends to gradually fall, and it hardly ever grows on a sustained fashion except right before a recession. And I mark those periods in those little pink arrows that shows you just how the unemployment rate starts inching up. Now, we need to remember that unemployment is a lagging indicator, and that's because corporations are not eager to let go of their employees, which they've spent time and money training them, and you only see mass layoffs once a recession is officially declared. So it's a lagging indicator. But as you can see, in the beginning of 2023, the unemployment rate bottomed. And it has been inching upward ever since, and it's kind of rounding up right now. And I'm kind of concerned that this is, much like we've seen prior to previous recessions.
Yeah. So let me ask you a question. The blue line on this graph is the unemployment rate. So over here on the left, we see starts at 0, goes up to, let's say, 7.5%. What we're seeing in the unemployment rate throughout history is that just before recessions, which are the gray shaded areas, we tend to have a bottoming in unemployment. And then it just looks like there's a little period of time, and I think you described this as you spoke, where unemployment kind of the rate kind of stagnates for a year and a half, whatever, and then what we see is this move up, or a slow move up, and then boy, it just looks like to me that like pretty much right after it starts to move up is when we get hit with these big gray sections, the nasty recessions. And again, when I look at this graph, I see that there's been a long period of time since we had a recession. That it's just, if you look back since 1950, like it looks like we're overdue for a recession.
Yes. Now, we had a brief recession in 2020, but in hindsight, it wasn't the big financial crisis that we were always warning about, because it was, kind of man-made. It was artificial. So we had this, spike in the unemployment, but just as rapidly as it went up, it rapidly went back down when, we started going back to work. And but now you see how it is. It's not rapidly going up. It's just inching up. And, I interpret this as, the companies who have to let go of employees because things are not going well, and they're doing it reluctantly. But once an official recession is declared, then you're going to see mass layoffs. And then, only then, the rate of unemployment spikes, really shoots up. And
that's what I was going to say. When I look at this graph, it's like it starts to barely go up, but it doesn't shoot up until you're actually in the recession.
Yeah, and if you're managing money, you can't wait until the rate of unemployment shoots up. It's too late to do anything about it. Yeah. You're in the midst of a recession.
Yes. Interesting. I'm going to go back to, is this the next slide here? Yeah. Okay, here we go.
The final indicator I want to show, it's the Fed's funds rate. Very simply, the Fed's funds rate. And we see that the Fed has a very specific mode of operation in recent decades, in which, during recessions, they slash interest rates very rapidly, and in recent years they kept it down for a long while. And when they feel confident enough that things have stabilized, they start, increasing their rate very gradually, 0.25% every time, every meeting, for instance. And then you see that, at a certain point, it plateaus. It remains constant for about a year or two. But you see that every time that the Fed starts cutting rates again, it usually happens right before a recession. And as we all know, recently the Fed started cutting rates at first by 50 basis points, and this month by another 25 basis points. And I'm thinking that they're seeing something that they're not telling us. They're seeing something on the horizon. Perhaps they have their indications that the economy is getting weaker. And as far as I'm concerned, this is another piece of evidence that we're probably getting close to a recession.
Yeah, well, I like to say, Oren, that the Fed is not going to come out and say, hey, guys, we think we're heading into a recession, right? It's kind of like when I go to my local bank, I'm not going to walk in the door and they're not going to greet me and say, hey, our portfolio of treasuries and commercial real estate debt is grossly underwater. You might want to take your money out of our bank, right? Like the Fed's going to say, everything's great, everything. And I mean, they're going to spend the most positive perspective on things, when in reality, what we have to look at is what they're doing, which over the last few meetings has been they're cutting rates, which means, and like you said earlier, they're cutting rates in an inflationary environment, in an environment where they haven't won the war on inflation. So I think how do you think this bodes for the silver price and the gold price as we look out, let's say, in the next year or two?
There are analysts who argue that gold has this ability to, foretell the future, to see into the future, and gold has done tremendously well in 2024. It has gone up about 30%, perhaps a little less now that we've had a correction. That's great performance for an asset which is, basically there's very little risk associated with it. And this could be like another indication that, gold sees the future inflation that will come after we get into another recession, and then perhaps the Fed is going to try and inflate the bubble once more. Perhaps gold is predicting that.
Mm-hmm. Yeah. And let's be, look, in one hand, in one hand, we can hold things like silver and gold, right? Real assets. In the other hand, we can hold things like this. And to me, it's a system of weights and measures, right? You can hold dollars, you can hold euros, you can put in my opinion, you can put cryptos in that pile as well, right? But this we know is just going to continually be printed, deflated, however you want to say it. There's just no way around it. And sure, a little more silver, a little more gold is going to be mined every year. A lot of silver is going to be absorbed by industry. That's a whole different subject. But at the end of the day, we're just in this system where if you compare those two things, all this paper, make-believe, debt, right, crypto, to real money, I don't know. To me, it's a no-brainer. But I've been wrong in the past.
It's a good opportunity to give a word of warning, because in past recessions, not always, but in some of them, we initially see a decline in the price of gold and silver as everything else is falling, as well as the stock market is melting down, and and as people are running with their hair on fire, then the price of gold and silver tends to fall as well. And the explanation for it, at least the official explanation, is that there is a decline in industrial demand. But it's usually short-lived, because usually after that decline, the Fed again starts cutting interest rates, resumes QE, prints a bunch of money, and in the next recession they could print. The last recession they printed 5 trillion. This time perhaps they'll print 10 trillion. Who knows? And then investment demand picks up. And just like we've seen in 2020, the initial decline was very short-lived. It was like a V shape. And by summer, if I recall correctly, gold was setting new all-time highs. And will there be a decline in the price of precious metals in the next recession? I don't know, because perhaps. Well, I expect that there will come a point in which the public will begin to price in the future inflation. We'll start to anticipate the moves of the Fed, and will perhaps even, buy gold and silver to such an extent that we won't even get that initial drop. I don't know. That's too much for me. I can't.
Well, right, but
more than my crystal ball can see. But the thing is, our listeners, they should be very careful. I mean, there could be an initial decline. They shouldn't be afraid of it. If anything, they should look at it as a buying opportunity. Perhaps they can stack a little more if they have some cash left. Then perhaps it's actually a good idea to keep a little bit of cash just in case you get that initial decline, and you'll have a buying opportunity, and perhaps you'll be able to stack some more for cheap, because I haven't been able to stack for cheap lately. Just yesterday I participated in another auction, and I bought me some more silver, a bit more silver, and you just don't want to know how much it cost me. I had to pay $36.50 per ounce.
Wow.
That was the cheapest silver I was able to get here in Israel. And by the way, I tried to get another item, and I offered $36 per ounce for it, and someone came along and outbid me and bought it for $38 per ounce. Okay, so that's the effective price of silver in Israel right now, probably, because people are paying it.
That's what you're paying, right? That's the price. I would say that's the price. What's the price of silver in China, right? If you go to the Shanghai Gold Exchange, probably 33, 34. Again, that's a physical market. I want to circle back to something you said and give my thoughts, because I agree with you. This whole notion that if we do hit a recession, that the gold price is going to go down to 1,400 or 1,800, whatever the case may be. I think that we could very well be in a different environment. And you alluded to this when you were talking as well, that during the I guess it was the C19 situation, silver took a nosedive, but then came straight back up. And then I think the next example that we might want to look at is what happened during the little banking crisis that occurred a year and a half ago. In March of 2023, we had an almost immediate response in the silver and gold market. I mean, I don't know if you remember, but silver was like almost impossible to get there for a couple of weeks, and premiums on American Silver Eagles, people were paying $50. The spot price was $25, and people were paying $45, $50 for American Silver Eagles. So it almost feels like, again, not to overuse the phrase, but like the cat's out of the bag now, right? Like in 2008, it was a different situation back then. People, I think, were more the Fed and the fiscal situation, the monetary situation was the U.S. debt situation was not good, but nowhere near as bad as it is now. And it feels like there's so many more people now that are aware of what's going on with the monetary and fiscal situation. And on top of that, we've got just the whole world geopolitical situation, which has shifted the whole notion that central banks are buying gold, that it feels like, and I could be dead wrong, right? But it feels like we really are, like the trend indicates and the current evidence indicates that we kind of are in a different environment now, when we're just, honed in on the silver price and gold price and the prospect of, I mean, at some point it all blows, right? I mean, at some point, Oren, would you say like the whole thing blows? Like the dollar, like it's that wake up, because it's all based on confidence, right? This Oren, right, was a silver certificate, right, back in the day. You can see at the top, right? This is a Federal Reserve note, as you know, and it's all based on confidence. And at the point when, a growing number of people to a greater extent start to realize, like, like my mom and dad or my neighbors who think I'm crazy because I like silver and gold, but when they're like, oh, now it makes sense, right? These dollars, things, groceries are, that we could get to this point where there could be a major sea change. And I don't know. I just, when I look out into the next year, 5 years, I'm wildly optimistic. I don't want to say optimistic, but I am wildly optimistic, but very comfortable with silver and gold's ability to protect mine and other people's safety, wealth, ability to eat, pay electric bills, all that good stuff.
Look, I would say that perception is changing, but very, very gradually, very slowly. But there will come a point in which it will suddenly, start moving very rapidly, and there will come a point in which everyone will suddenly get it. Yeah. And you don't want to start buying at that point, because at that point you're going to have lines.
You want to be done. You want to be done.
The coin shop. No, you want to be before that phase. Now, look, we don't exactly know what's going to happen in the next recession, and perhaps the price is going to drop. Perhaps you will be able to buy some silver, cheaper for a cheaper price. But perhaps there are going to be availability problems. The official price will fall, but you won't be able to get any. So I'm telling people, don't wait till the next recession to buy some silver. Do it now. But still, if you get the chance to buy it cheaper during the next recession, you can take advantage of that opportunity as well. I mean, like, one should not negate the other.
But Oren, look what happened during the little banking crisis, right? There was a $20 premium on these because you couldn't get them.
Yeah.
Look, here's the reality, Oren. Think about this. You talk about lines at a coin shop. Who cares about coin shops? Coin shops don't matter anymore, right? You talk to somebody from the 1980s when silver went to $50 in the United States, and you talk to these old guys that worked at coin shops, and they say, oh, there were lines of 200 people out the door at the coin shop when we got there in the morning, and we would have to go out and give people, the first 100 people, numbers, tickets, and then tell the other people that we weren't going to be able to help them today because we just didn't, that's history. Now we have this thing called the internet where people can go and buy, can go to Pimbex, can go to any other host of big online bullion dealers, and they can wipe it out in the matter of hours.
Overnight.
Hours, right? Hours, right? And information, and on top of that, just like the information used to be, people would go to work and they'd be at the water cooler and their buddy'd say, oh, I'm going to buy some silver because I heard it's going crazy. And then that guy would go home and drive to the coin shop. Now, right, it's all instant. I mean, like the silver and gold, but let's just say silver could be gone quickly, like really quickly, not days. I mean, and we saw that we've kind of experienced that during C19. I bought some silver over the weekend during the C19 crisis. It was the one great purchase I ever bought when silver was like $14 an ounce, and it took 6 weeks to get to my house, right? And all the big online. So like, this is real in the amount. I talk with the guys that work at the big bullion dealers, and the amount of physical silver out there, just because it's been so readily available for the last year and a half, right? It's still just a small segment. I mean, it really doesn't, it doesn't take a big increase in awareness or interest for it to get wiped out really quickly.
Yes, as you say, retail inventories are very small, and they can be wiped out in the matter of hours if there's truly a panic. If there's truly a surge in public demand, we can see bullion dealers, online bullion dealers, just getting wiped out in the matter of hours. Yeah.
And you said this earlier, like you don't want to be like when the price does go up, or neither of us have a crystal ball. Oren and I are not giving financial advice, but if we do get to a point where there's a huge surge in demand for silver, you said you don't want to be buying then. It's not that you don't want to be buying then. It's like you won't be able to buy then, right? Or unless you want to get raked over the coals with the buying. So, Oren, thank you for being here. I do want to say before we sign off, I need to say thank you to my other channel sponsors: First Mining Gold, Canadian gold developer with 2 multi-million ounce projects in Canada, and Fortuna Mining, an active mining company with gold and silver mining operations in Latin America and an expanding gold operations in West Africa. Let's get back to our friend Oren. Oren, go ahead. Yeah, final words.
Yeah, well, we didn't get a chance to go into depth as to why the next recession, if I'm right about that, why the next recession could be, worse than anything we've seen, worse than 2008, worse than the dot-com bubble bust. And I'll just send your viewers to check out my video, which is called Brace for Impact, where I go into detail as to why I believe this recession will be the big one.
Yeah, hold on a second here. Silver Hermit. Hold on. Bear with me. There we go. Guys, I want to bring you out and show you. Hold on here, Oren. And this should work. Can you see your channel up there right now, Oren?
I can see it.
Okay, here we go, guys. This
is discussing, but it's my channel. Yes.
Here we go. Hold on. Silver Hermit. There it is. Up.
We are living through dangerous times. Gross mismanagement.
Okay, here we go. This is Oren's YouTube channel, The Silver Hermit. And the video, which one were you just referring to?
Well, it's not here. Check out the videos, the video tabs.
Yeah, here we go.
Videos. So it's not the last one. It's the one before. It's called Brace for Impact.
Brace for Impact.
Nice asteroid falling on the Earth.
And a container of food, which we're all going to need. So, guys, I would highly recommend. I love watching Oren's content. Again, here's his channel. Just go into the search bar, type Silver Hermit or The Silver Hermit, and it'll come up. Don't forget to check out Mountain Bullion as well, sir. Yes. A mutual friend of Oren and I. And Oren, on behalf of myself and our viewer who's joined us today, thank you. All right. You've really kind of drove home for me as I looked at those charts in particular, like, wow, the charts indicate that we're headed for a recession. All of this while we have a stock market in bubble territory, a new president coming in, brace for 2025. But, like I said before, I was wrong about 2024, but it sure feels like we could be in for some uncertain times heading into 2025.
Yeah, so thank you for having me. Please check me out on X as well, and check out Mountain Bullion too, because we do live shows together. We do videos together every couple of weeks. So check out his YouTube channel as well.
Sounds good.
More will come.
More will come. All right, thanks, Oren. We'll see you soon.